With investors such as JP Morgan & Chase, Goldman Sachs, and Harvard Corporation, WeWork was valued at $47 billion and was considered one of the world's richest startups. However, due to governance and leadership issues, WeWork has failed miserably. After being listed on the stock exchange, WeWork only reported a valuation of $12 billion. Let's take a look at what really happened with WeWork and who was the culprit. Welcome to Wealthy Mindset, where we explore unique and breathtaking angles from the world of money, economics, personal finance, and investing. But before we dive into it, please like the video and subscribe to the channel. Also, click on the bell icon right there so you never miss any of our subsequent videos. After selling their first startup, GreenDesk, in 2010, Israeli-born Adam Neumann and American-born Miguel McSelvey founded WeWork. They rented their first location in Soho, Manhattan in the year 2011. The concept of WeWork was to provide an area where employees from different companies could work physically as well as virtually on the same property. In the same year, Manhattan real estate developer Joel Schreiber bought a 33% stake in their business idea for $15 million. PepsiCo took advantage of the opportunity and established an incubation center to help facilitate smaller firms and WeWork members. By the year 2013, WeWork boarded 350 startups, including Fitocracy and HackHands. By the year 2014, WeWork became the fastest-growing office space lessee in New York, receiving investments from Wellington Management, Goldman Sachs, Mortimer Zuckerman, Harvard Corporation, JP Morgan, Chase & Company, and others. WeWork was listed among the top 50 innovative fast companies in 2015. With a valuation of $16 billion, WeWork raised $430 million in funding from Legend Holdings and Honey Capital. In 2016, WeWork sued one of its employees who leaked information about the company's economic position, claiming that they wouldn't be able to reach the financial targets. BuzzFeed published a document in which they discuss how WeWork seeks investors, Neumann's strange behavior during his sales pitch, and their expensive business model. A few other things were also uncovered in 2019, which we will explore later in the video. Considering the soaring valuation of WeWork, the Wall Street Journal's journalist Elliot Brown described the $20 billion valuation of the company as the pixie dust of Silicon Valley, meaning that the valuation isn't accurate but is exaggerated because of its surroundings. Morgan Stanley predicted that they would be a $100 billion firm after that, and they raised additional investments. In 2017, WeWork focused on expanding its business to several other countries like China and Southeast Asia by raising funds from investors like SoftBank Vision Fund and Honey Capital, who invested $500 million and $4 billion respectively, valuing the company at $20 billion. They expanded in Southeast Asia by acquiring a Singapore-based Space Mob and allocating a $500 million budget to operate there. They acquired the floors of HBC department stores in Germany, Vancouver, Toronto, and New York to use as shared offices. Between 2017 and 2019, WeWork primarily focused on strategically identifying and investing in places like universities, colleges, schools, tuition centers, and various small and medium-sized startups, before raising $10.65 billion in January 2019, boosting the company's worth to $47 billion. The situation changed in 2019 when their occupancy rate began to decline, going below 80%. And as a result, their revenue also dropped below $6,360 a year. Statistics show that 90% of the startups fail, and this had a significant impact on WeWork's business model, resulting in a $2 billion loss in 2019. In August 2019, when the company decided to launch its IPO, the company came into the limelight, and numerous news channels criticized the company's work and revenue-generating model. Given the amount of pressure, WeWork was forced to file an S-1 filing for an IPO, which forced Neumann to resign as CEO and give up a majority of his stake in the company. Looking at the situation, the board opted to postpone the IPO. They launched the IPO via the SPAC merger in 2021. At the time of the IPO, the valuation dropped to $10 billion. One of the governance issues that the board believed was not acceptable to the firm was Neumann's extravagant demands, expenses, and work ethics, which included withdrawing money for personal work. For these reasons, Neumann was asked to leave the company. Adam Neumann was able to obtain his share of money at a reasonable valuation by taking out $1 billion in cash, $1 billion in stock, and $185 million in consultancy fees for the previous 4 years, all of which SoftBank, the majority stakeholder, agreed to and issued the packages. The company is now having difficulties with its operations. Given their cash-burning situation and weak revenue model, it is very difficult for them to make a profit. WeWork is currently operational and has partnered with Cushman & Wakefield for a $150 million investment. It is a New York Stock Exchange listed company that has launched a SaaS-based business model. While assessing any investment opportunity, ignoring the qualitative features of a company is regarded as the biggest mistake, and in this case, corporate governance is that mistake. Now, you guys, let us know what criteria you use to determine if a company is investable or not. If you enjoyed this video, slap a like on it and subscribe to the channel to stay updated with the latest business trends and interesting facts. You can also turn on the bell notifications so you don't miss any of our mind-blowing videos. We'll catch you in the next one. Until then, bye!